Good morning, everyone. Welcome to today's Morning Coffee with Mike. We are talking about trade alerts. Are they a good thing for part-timers? Are they not? Address some of your concerns, address some of the things that I like to use when setting alerts and really how they can help you to trade better, be more aware, and to actually eliminate a lot of the FOMO and having emotional responses and all those things. Before we get into that, let me actually turn off the music here. I've been on a Queen kick lately. If you heard some of that in the background, but before we get into the nuts and bolts of setting trade alerts, first of all, thank you guys for being here live. Drop into the comment, let me know where you're from. Let me also say to like, subscribe, and share this out so that way more people can be a part of setting alerts. So tell me if you do. Type into the chat. Let's get a feel for the room. Let's see how many of you are actually using alerts, setting alerts, know what they are. Few things about alerts. Here's how to do it and to do it effectively. The first thing I would say is to set them on your time, right? Like if you are busy setting alerts in off periods, right? Times when you're not trading, times when you're not working. That's where some of the fear of missing out and being distracted, where those types of things can come from. We want to we want to eliminate distraction. We want to eliminate fears of missing out. We want to eliminate as much of the confusion as we can. We want to make things clear, right? Well, if we're ever trying to muddy the waters, that's where things can go awry. And like somebody just said, they're feeling emotional. Their trading psychology is uh, fucked. How they just said. So we'll talk about that too. So trading alerts. Let's stick with trading alerts for the moment. Some of the common objections to setting alerts: distraction, concerns, fear of missing out, relying too much on tech. So let's say that you're somebody that is doing fundamental research and then you have these alerts going off in the background. Maybe you're setting too much alerts. How can you organize them better? Okay, let's address a few of those. Here's some of the ways that I like to use alerts. I actually have an alert set on Bitcoin right now. Let me share this alert with you on Bitcoin. And we could even talk about how to set alerts well. So let's switch YouTube over and get this switched over on here. Make this screen a little bit bigger. And you can see that, and I'll get rid of my calendar and some of this other stuff up here. I've just put out a new release, move that out the way. Okay, great. So looking at Bitcoin, Bitcoin is moving towards that gray line, that gray uptrending line. You guys know what that is? That is the 200 SMA, simple moving average on the daily. Now, I've got this alert set right there. You see the little alarm clock right there? We've got an alert set there, and the alert, if I zoom in a bit over here, bring you guys closer, could say that Bitcoin is crossing 2400 and nearing the 200 SMA. Very simple, right? Your alerts don't have to be complicated, but they should be set at key levels where you would start to get interest. I'm going to start to get interested in Bitcoin at the 200-day simple moving average. The reason why, let's switch you back around to the chart and I'll share with you why. If we zoom out, out a bit, you can see that Bitcoin bottomed down here back in November of last year. And then it's since attempted to break out over here, tested this level at around 2400, and then broke out, ran for a couple of weeks, and has been consolidating over the last couple of months here. Bitcoin is still in an uptrend. Bitcoin is still holding above the resistance that it made way back here in February. So right now, the crypto space is pulling back. All the cryptos are pulling back, and Bitcoin has been the leader. The short term moving averages, let's zoom in a bit. They're starting to roll over and come down a bit, but the longer term 200-day moving average is in a rising uptrend. So, part of what that tells me is that Bitcoin is still in a longer term uptrend. It's in a shorter term consolidation. And should it get to this level here around 2400 and around the 200-day simple moving average, I want to become a buyer, right? I already have my Bitcoin position. I'd want to add to it at that level because that's where it's a longer term entry. So I set an alert there. So that way, if and when price does get there, I can go and buy at that level. Now, you might be saying, but Mike, couldn't I just place an order with my broker to buy at that level? And you could. That's a tactic that I've used in the past as well. The thing to think about alerts and the thing to think about orders are that these are tools, much like you would have a screwdriver and a hammer. Right? You're not going to hammer a screw and not going to screw a nail. These things need to be used at the right time. So, when is the proper time to use an alert and when is the proper time to place an order? I like to place orders on trades that I'm imminently going to take. Imminently going to take. So, I'm going to take it this week. For me, it's this week. And the reason why is because my style is swing trading. I like to hold trades overnight. My average trade is held for about a month on winning trades. So I'll place orders and allow those orders to go, and I'll have that set up for the week. If it's an alert, like this Bitcoin one, I've set that alert for that alert's been hanging out there for weeks now, still waiting for it to go off. I don't want to just set an order at 2400 for Bitcoin because any number of things can happen between now and then. Plus, if I forget about that order, then I could get into other problems. So, setting alerts for something that's we're looking to happen potentially in the future can be a lot better. Here's another example of some alerts that recently went off on some trades that I was looking at today. Right, so let's switch this around, get YouTube back up over here. Right, so here's Wave. Let's come down onto Weave, onto the 30-minute chart. Okay, here's what I was looking at. Here's what I'm testing, and here's what it did. So Weave is a stock that is in a very hot sector right now, tech services, packaged software. It came down and tested that moving average right down there. Right, get all those annotations off the way, a little bit less noisy. Tested this moving average here. This is a 10-day moving average. Uh, we're looking at a 30-minute chart. I like to overlay the moving averages from the higher time frames onto the 30-minute. It allows me to get real surgical with my entries and to define where price is being supported at. So on this day, this was actually Friday's close. You could see that price came to the 10-day moving average, bounced off of it, closed in about half of its daily range, maybe a little bit above the halfway mark. So I had an alert set right up here, right above that day's high or that bar's high. So that way it would be a continuation of that bounce. Great. What happened? Continues to move from there, and I get the alert and I'm able to be aware of these things. You could also set alerts at support levels too. So just like how I have the alert set for Bitcoin, you could set alerts at breakout levels too. Now, where does the FOMO part come in? Right? Because one of the common objections to even setting alerts is that you don't want all the distraction, you don't want all the noise, you don't want to induce uh, emotional trading. I get all that. I'm all in favor of eliminating as much of the trash as we possibly can. So, what can we do when it comes to setting alerts? When it comes to setting alerts, we can be selective about the alerts that we're going to set. We don't want to set alerts for everything. We want to set alerts for something that will prompt us to take an action. So we want to be very intentional about the types of alerts that we're going to set. We want to attach notes to the alerts that we set. And we want to not go crazy with these notes, right? Because if the alert goes off, we're going to want to read something very quick. We want to keep it short, just a couple of words, just a couple of sentences, just like how I had in Bitcoin, right? Share the screen again and show you Bitcoin. Switch this over to crypto, Bitcoin. Come over here and get this one on the screen again. You see this, right? So I roll my mouse over there, and what's it say? It just says Bitcoin crossing 2400 and nearing an uptrending 200 SMA. For me, that's enough. You don't need to go crazy with these kinds of alerts. You don't need to go crazy with any of that stuff. Just a simple sentence or two, not place too many alerts, just for what you want to take action on, and it can help save you quite a bit of time. Let's take some questions. See a lot of people hopping on Instagram. Let's go through Instagram and check some of these questions. You guys over there on YouTube and everywhere else, Twitter, Facebook, get your questions in as well. All right. Hello from India. Good morning, good afternoon. Okay, well, let's get back to this comment from earlier from Iconic Kelv saying, I'm in drawdown. My emotional psychology is fucked. What can I do? Step number one, stop trading. If you feel very emotional, like it sounds like you are, the first thing that we want to do is stop. Right? It's almost like if we are stuck in the mud, right? The way to get out of the mud is not to start spinning our wheels even faster. The way to get out of the mud is to stop and then get out of the car, assess, maybe put something under the tires, and then we're going to slowly get out of there. This is what you need to do from a mental perspective. So, step one is to stop trading. Stop trading for however long it's going to take. I would say at least a day or two, right? At the very least, that's the absolute minimum. You might need to take off for a week. You might need to take off for a month to reassess, because as you start to create distance between yourself and your next trade, what's going to happen is that you'll start to gain a bit of clarity. You're not going to just go back in and take a trade. You're going to take the step back and then assess, well, what got me into this mess to begin with? Right? Well, was I sizing too big? Was I taking appropriate trades? Was I trading with my edge? Do I have an edge? These are the types of questions that you're going to need to answer for yourself. And the time to answer these kinds of questions is not when you're feeling emotional like you are, when you're feeling upset. You want to step away, maybe jot down, right? If you want to get out some of these thoughts and emotions, right? Like, don't let those thoughts and feelings just go, but journal about them, right? Grab some paper, grab a pen, write these things down. Then put that down, then go for a walk. Set it down. Come back later. Give yourself 24 hours, give yourself 48 hours, and then start to make the assessments of, what happened here, right? Like then you could think more clearly about what you wrote down. You could think more clearly about the actual trades that led to this. And then you could start to think through, well, what can I change to improve? Do I even know? Right? There's a lot of things that we need to do. I talk about all this stuff in my book, The Trading Mind Wheel. It gives you a blueprint, especially if you're somebody that's just starting out, especially if you're somebody that's trading part time, like how I started out more than 20 years ago. This is going to give you your blueprint, The Trading Mind Wheel. It's on Amazon. The link to it is in my bio. Okay, next questions. What I learned is stable risk management is the system. Stable risk management is an important part of any system. We also need to know what trades we're going to take, what constitutes a high probability trade. Do we have a checklist for those things? Actually, there's a tool on my website, marrowwealth.com. The tool is called the Trade Gauntlet. What's a trade gauntlet? The trade gauntlet is a checklist of all the things that I personally find important for any stock that I'm going to trade. And at the end of it, after I analyze a stock, it's going to give me a score based on the boxes that I checked off. This tool is free and and we just enhanced the tool. We just added a series of quote unquote boosters to the tool. What are these boosters? Boosters are things that you could use to give a boost to your end score. What are these things? They're self defined. You get to put anything you want into this booster section. So if there's something else that you want to track, maybe you're somebody that uses Bollinger Bands. I don't care about Bollinger Bands, but maybe you do. Great. You can now add that to the gauntlet. Lots of different skill sets involved in trading. Risk management is one of them. Risk management is a very important one, but there are 7 others in addition to risk management, 8 altogether. 8 essential skills needed for trading mastery. Go get this book. Lots of great reviews on Amazon. Question about what percentage should you risk? So on any given trade, you would want to make sure that the amount that you're risking is not going to put you into the risk of ruin. So, how much is that? Typically, the amount is 1% or less of capital, especially if you're starting out. Why 1%? Does that mean that if I have, say, $10,000, that I'm only going to buy $100 worth of something? No. What it does mean is that you're going to risk $100. And if you end up losing that 100, then you call quits on that. Great. So how can you position size into there? That's where truly uh, charts and technical analysis comes into play. Charts are not meant to predict the future. They don't predict the future. They just tell you where price is at right now, where price has been historically, and we could also have an understanding that price has a tendency to trend over time. And how can we identify when trends are changing and then we could identify those trends? But that's just the tip of the iceberg as far as charts go. The beauty of charts is that you could easily identify where to get in and where to stop yourself out. And that's going to be the essence of what's going to tell you if something is a low risk trade. And if it's a high probability, high reward to low risk trade, that's what I'm looking for. So the percentage that you should risk, 1% of capital, but the where you enter, where your stop loss is going to be, that's going to allow you to take a much larger position size potentially than if you don't know where you're going to stop yourself out if you're wrong. If, let's say, you're somebody that don't know where I'm going to get out if I'm wrong, I'm going to hold this thing forever. Well, great. How much are you willing to lose, period? Right. So let's say that you're somebody that's brand new, you're just starting out, you're approaching the market with $10,000, and you're saying that I like Bitcoin. I like Tesla. I like fill in the blank. I'm going to take my 10 grand and put it into this thing. Well, then you better be willing for this thing to potentially go to zero with your 10 grand, because if you don't know where you're going to cut your loss if you're wrong, then that's basically what you're saying. You're saying that I'm going to allow this thing, right? And then perhaps you're like, well, it's not going to happen. Well, chances are that it's not going to go to zero, but are you going to be willing to take a 50% haircut on this thing? How about a 70% haircut? How about an 80% haircut? Tesla, let's say, right? Tesla, Bitcoin, we could do both of these. So I will bring up the chart of Tesla. Tesla's been rallying lately, but that's more recent. So this is where Tesla's at right now. Tesla's continuing to move, but Tesla had topped way back here, right? Off the screen even. Now let's pull up a weekly chart of Tesla. Here's a weekly chart. So let's say that you're somebody that bought in at $400 on Tesla, right? You bought the top way back here in October of 21. And you're like, you took your whole 10 grand, you put it in there, and you said, this thing is going to the moon. I'm going to hold this forever. Well, it's been about a year and a half. So as of right now, you're still down about 40%. At one point, you were down as much as 75%. Would you have held through all of that if you're really honest with yourself? Most people would not. And there would be plenty of reasons too, right? Well, when price is moving one way or not, there's always news being produced, right? Quote unquote news. Yeah, I use news in that way, but everybody likes to talk and to get attention. Nobody really knows why price is moving. The real reason why price is moving is because there's more buyers and sellers on a given day. And the argument for why price is moving one way or another, well, all we really know from news is what we're being told. Does it really matter? What's going to make us money is the difference between where we enter and where we exit. That's it. It really is as simple as that. So when it comes to something like a Tesla, we could look at Bitcoin, or we could look at anything else. Be honest with yourself. Where would you likely exit if the trade starts to move against you? I like to use charts to help figure that part out and then cut those losses real small. So that way I could get out and then move on to the next trade. And over time, get a lot more winners than I do losers. My batting average historically is close to 50%, and my average gain is about twice as much as my average loss. My average gain is roughly 10%, 11%. My average loss is about 4.5%, 5%. So do the math. Over time, that works out to a lot. Part of the reason why I'm able to be in the game so long is because I risk a little to make a lot. And no one trade is going to knock me out of the game completely. That's why we want to keep our percentage risk real small. I like to do 1% on average. If it's a challenging environment, I'll cut that in half to 0.5%. If it's a great environment, I'll go up to about 1.5%, but not much more than that. Someone's asking about leverage, lot size, account type, and capital. Well, what's the question there? I see a lot of words, but I don't see a question. Maybe you put a question later on. All that will help psychology. Perhaps. So part of what will help psychology is risking an amount that's appropriate for you. So here's here's a here's a great tactic that everyone can use. If you're going to trade, take a set amount of capital, set that aside specifically for trading, and then use that only for trading. Don't use the money that is just sitting in your bank account. Oh, I'm going to trade this, and then that's it. If you have emotional attachment to the money, then that's going to start to create problems. How do you know if you have emotional attachment to the money, right? Like start peeling back the layers of the onion. How do you know these things? The way to know them is to ask these questions. The Some of the questions are, well, what are my beliefs about money? Pretty broad general question, but we have hundreds of beliefs about money. Jot down whatever you think about money. I use money to go to the grocery store. I get money from working my job. Getting more money is hard. I'm worried about risking money. All those are examples of beliefs that maybe you have, maybe you don't have about money, but you literally have, well, whatever comes to you as a thought about money, that's a belief. Write all those things down. You'll start to unravel what some of the beliefs that you have about money are. Then, after you do that, you could start to figure out, well, are these beliefs that I wrote down? And the reason why you want to write them down is because it's creating distance between the belief and you. You're able to look at it objectively. It's not just floating around in your head. It's actually out here in the real world. You can look at it, assess it. You can ask yourself, is this leading me closer to or further from the goals that I have? Just one example. There's exercises on my website, marrowwealth.com, that you could go get. There's a thing called the Trading Mind Decoder that'll help you out quite a bit on marrowwealth.com. It's right there on the homepage. You could also grab a copy of either of my books. This is the new one. This one will help you a lot. Go get it on Amazon. You could look up my name, look up the title of the book, tradingmindwheel.com, and go get it. Let's see, what other questions do you guys have? Got 2 more minutes here. All right, last question is, how much time do you need to be profitable? I would look at it this way. Look at the amount of consistency that you have. If you're looking at it as how long will it take for me to be profitable? Well, I could be somebody that's never traded before my whole life. I can open up an account. I could go to Robinhood, open up an app, fund the account immediately, and then I'm trading for free, right? I can place a trade and it can make money on day one. And then, bam, I could say, I'm profitable. That's not the answer that you're looking for. The answer that you're looking for is, how long does it take to be consistent? Consistency. So, what how long do you want to be consistent for? Do you want to be consistent for a day? How about a week? A month? A year? Look at consistency in spans of years. You also want to track your consistency. You want to have a journal. You want to have a trading log. You want to have a post analysis routine where you are looking at your trades, why you're taking these trades. Are you following an edge? How are these trades performing? Then that allows you to move your trades into two different piles, a winning pile, a losing pile. You could then take a look at the winners, what went well in this group, take a look at the losers, what went wrong in that group, and then you can assess and continue to be better. That's going to take time for you to do. It's going to take time for you to learn how to do these things well, how to do these things properly, how to do them efficiently. A lot of this stuff can seem very overwhelming, especially when you're trading part-time. I know that it did for me, and that's one of the reasons why I struggled with it for so long. That's one of the reasons why I kicked the can for so long on doing these things. Eventually, I woke up and decided that this is what I want to do, and if I want to do this, I have to be a professional, or at least act like a professional. Often we need to begin acting uh, in a certain way to get a result long before it shows up. So apply that, and that this doesn't mean fake it till you make it. Well, what I'm talking about is let's say that you're out of shape, overweight, and you go to the gym. Let's say that you go to the gym, you start out going to the gym 3 times a week, 4 times a week. You're starting to behave like somebody that's in shape. You're not yet. You're not on day one. You're not on week one. You're probably not even on month one, but you're starting to build consistency. You're starting to be on your way. Take that same mindset, apply it to trading. You need to act like a professional. You need to start developing the skills and executing on these skills every day, every week, keeping up with those skill sets. And that's how you're going to get the results that you want. The whole book helps you with that. I've developed an entire program where I'm coaching people one-on-one every day. All those things are available to you. Go to marawealth.com, find out more about them. I've said enough about all this. It's not meant to be a sales pitch. It's just meant for me to be here and to help you guys as much as possible. We're out of time for today. We're already a few minutes over. I want to say thank you all so much for being here with me. We'll be back here again tomorrow for the next Morning Coffee with Mike. We'll see what the topic is. I don't recall off the top of my head, but I know that it's a good one, and I'm looking forward to seeing you guys. Take care. Much love. Peace out, everybody.